I spent years trading Forex without seeing any results. In futures, it only took me 1 week. You can go check my futures series, it's all documented on YouTube. I started from zero and in 1 week I was already funded. And yes, you can argue I only got that because I already had experience from Forex and I was already a funded Forex trader. But it is much easier. It is much easier. And today I'm going to give you the points on why it's easier. We're going to be comparing how my strategy works on both, the comparison between the pairs, on how they move, and the prop firm aspect. Because we all want to get funded, right? So as you can see, we're on USD right here. You can see some nice stop losses I've been getting recently. I've been getting cooked on this. It isn't the reason why I switched to futures. I still trade Forex. But right off the bat, just look at this EU, this NQ. Right, it's way nicer, right off the bat. Price action is a big factor, of course, spreads. But let's talk about my strategy. How does my strategy compare from Forex to futures? If you're not new to the channel, you know that in FX, my strategy is composed of seeing a liquidity sweep, right? Because we trade liquidity at the end of the day, a smart money trap, and then a change of character. And then for futures, same thing, we wait for a liquidity sweep, but there's no smart money trap. There's only a change of character. So we cut off the part that's most complex about the strategy, the most subjective, and coupled with that, we have the nice price action. Because yes, Forex can move a lot sometimes, but in futures just like this, I can get wins on a matter of a couple minutes. So no wonder there is so many ICT traders that are trading futures. It just works better for them, and I don't blame them. Because if you look at USD, you'd be trapped all over the place. I've done many videos on my channel about smart money traps. So look, for EU, it has been delivering a lot of traps, kind of as usual. The charts are looking a bit ugly. And that's not to make excuses, right? These stop losses are deserved. I can't say the charts are shit and trade them and blame the charts, right? It's all my fault. I will say, I missed out some setups as well. Missed out on this online session because I don't trade it. I missed out on this, well, missed out quote unquote because it was also news. But as you can see, there was a sweep of liquidity, but after that, we came to sweep it again. And that's a smart money trap. And that's super common on FX, especially on USD and GBP USD. But once it comes to NASDAQ, most of the times, it's just a sweep of London, a sweep of Asia, or a sweep of any liquidity. And we go to the opposite direction. In these, you can clearly see a case of AMD. Accumulation during Asia, London, and then as soon as market opens, you got the manipulation and then the distribution throughout the rest of the day or the kill zone. And the second reason on why it's better than Forex is the easiness of the prop firm challenges. And to give you an example, I want to show you a prop firm that I came across, which is Humble Futures Funding. And what I really like about them is that they focus on building real traders, not just quick account flippers. Their system is built around structure, discipline, and risk management, basically helping traders reach that funded line the right way. And the crazy part is that they got a challenge that's 90% off for Thanksgiving. These are their 3 type of challenges. So basically they got the standard path, which is normally what most of you guys should be aiming to go for. That's the one that's 90% off. So you can use the code Dylan to take advantage of that. There is an express path, which is basically more designed for experienced traders who are just trying to get the challenge done over quickly. It is a 2 steps too, but there is no consistency rule, no activation fee, and there's currently a 25% discount on it, but it might go all the way up to 35% in the Black Friday. Dylan Torres will give you the best discount for this path. Then the instant path, you all know, you get instant funding. And only $120 for a 10K, that's crazy. Plus, you can get a discount code from 15 to 20% on this in case you're already an experienced trader and don't want to deal with the challenge. All right, for the firm benefits, the payouts are super flexible. You can literally just trade for 5 days and you're eligible for a payout, meaning you don't need a buffer. You can just request whatever you got. Even for the resets, you can get 45% off on the express path and all the way up to 92% on the standard. The 50K has a target to drawdown ratio of 1:1. Basically, you have 5% of drawdown, but you also only need to make 5% of profits, which normally is around 6% on the industry. For the price, don't even worry about paying this. Just use the code Dylan and you get 90% off. So you can see how dirt cheap these challenges could be and the scalability factor of which I was talking about, you can just get multiple challenges. And at the back end, there is an activation fee, yes, starting from around $120, but there is a fee on the back end, which you only pay once you have passed the challenge. And what happens on Forex? You pay the cost up front. You pay the cost up front, and if you don't make the challenge, well, whoopsie, your money's gone. If you want to get challenges that literally cost $18, make sure to use the code Dylan at checkout until the 30th of November. And now that we've discussed the prop firm game and the differences between Forex and futures, let's dive and see some of the recent trades I've been taking on NQ, for example. So you can see by the black lines where price goes and rebounds from. Just like in Forex, liquidity runs the markets, right? In every single market. So you can trade liquidity in all domains. And recently there hasn't been much. We came down to this efficiency. I wanted to intercept it, but this was too fast. This short wanted to come to this liquidity first. Here, I obviously was not going to trade London. But let's look at this win that I've got last week. Okay, so if we zoom in on this and appreciate a nice little ping pong. But this was a break even since it came back and then market shut down. But this one was an actual win on a funded account that I've got. You can see how we start the day off right here, right? Because we only count market open. And we have two liquidities. We have liquidity below, liquidity above, just like in Forex. Okay? And then you don't try to anticipate whether we're going for the lows first or the highs first. You just let price do that. Let price do exactly that without even trading it. Because anything can happen here. Inside these two liquidities, inside this range, price can do whatever. I've seen price come super close to a liquidity and go to another. That's just to build more liquidity towards one. By building more liquidity, I mean coming to make equal lows, equal highs. Things of that nature to just trap even more people. To build more liquidity on that side. It doesn't mean it's going to rebound from it like it did here. Untouch, kind of two-touch, relative equal lows. And then it comes back to it. Okay? So when price leaves liquidity behind, it's just to build more liquidity in it. Alright? It will come back to it in the future. So in here, you have market open, you have your liquidity set, you don't try to anticipate whether we're going for one or the other, you just wait for price to do exactly that, show you which side it wants to go first. Okay, it goes for the highs first. It's the middle of the kill zone timing, so it's not London close, we do not need to wait for a smart money trap. So what I did, I normally just stay on the 5 minutes. You can see there's this wick right here, kind of how price did this. And you have this structure right here on M1, if we go check it. But we swept the liquidity and then made a change character below and price just continued. And why? Because, well, this overall was a trap because you have the liquidity just above. This will become a trap. Because why? This is too simple for SMC traders. SMC traders will just see price running like this and then expect the initial order block to just work. After price has made a long move up to then come all the way back down, it's not going to work. It's most likely going to fail. And so, yes, I said no smart money traps in futures, but that doesn't necessarily mean the price doesn't move with the liquidity. All right, because smart money traps are liquidity. Okay, it's to take the smart money traders out of the markets. I just mean no smart money traps once it comes to the lower time frames after the liquidity sweep. Okay, so understand that, because if we were on FX here, this would be the first sweep, and because we're still in New York kill zone right here with this yellow bar, I would anticipate a second sweep into it to then finally short. But you can see here on futures how it's much simpler, where we just got one sweep and then we immediately do the move. Okay, in Forex this could have happened too, but in most case scenarios you have one sweep, two sweeps, like I just mentioned, just to trap everybody. Here is just one way, and sweep of liquidity goes immediately another way. All right, but on a higher time frames or larger scale, M5, M15, not necessarily higher time frames, we still do those traps. All right, we're still trapping people, and because this was a trap, this would have become a trap. Why? Just because we made a breaker structure here? You immediately think, oh, this took liquidity. We made a breaker structure here. All right, when price comes back, I'm a short it to then what? Take the equal lows, right? The equal lows that are just here, that we kind of make, and the trend line, which I want to say it's totally valid. It's totally valid for SMC traders, but it isn't that simple, right? It isn't that simple. So then, if you were London close, we made that sweep, right? But the thing is that it was already late. Then perhaps I would short here. I would short around this area. After we sweep this, I'm still waiting for liquidity to get taken, right? Because I say no smart money traps on the low time frame once we finally make the sweep of liquidity. But if we came back to test the order block right here, I know this is a mess. I'm sorry for that. So in case we were in London close, let's imagine, and price came all the way back up here, I know that this is a smart money trap, and I'm not going to position myself. Because I say you don't need to wait for a smart money trap, but you do need to wait for a liquidity sweep. And if we're here, then there's no liquidity sweep. There was this one, but I don't do retests. I position myself at the exact moment. So if you want to trade liquidity, don't wait for these huge moves to happen, these huge breaker structures to be visible for everybody, for then price to come all the way back up to your order block, and then you're missing out on it. You can see this impulse move, right? It's not out of nowhere. It's not a coincidence. It's to take people that have their stop losses right here. Okay, so if you want to trade liquidity, trade it at the spots. Meaning, right here, right here, right here, because these took liquidities, not the retests. And you can identify this smart money trap cycle everywhere, right? I've already told you, because this was technically a trap. Doesn't look that good, but just for the example, this would have become a trap, and because this was a trap, this would have become a trap. And guess what? Because this was a trap, then and this low made this move, you think this is going to work? No, this is going to become a trap too. Okay, in most cases, and we still have the trend line. We still have the relative equal lows. Okay? So you got to remind yourself that. And then here, yes, we swept liquidity once, twice, but I would never short this knowing that we're super close to another liquidity on a bit higher time frame. Right here on M30. Okay, you can see this one. But we did swap this inducement, although I would never trust it, because why? We did a huge move lower, came all the way back to it, right? Most likely gonna sweep it, right? And because this would have been a trap, guess what? This would have been a trap. Okay, so even though I don't wait for the smart money traps in the lower time frame like I've explained to you, we still do the liquidity structure, okay? Which is going from one liquidity to another, and not exactly something like this. So same thing that we're doing currently here, right? This low, this high made this huge move lower. How many SMC traders do you think have their order blocks around here? Trying to short as soon as we come here. And boom, we sweep them. Right? That's because they're not zooming out. Even though they're zooming out enough to have this order block, they don't zoom out to see that this is a relative equal high. Right? So a liquidity. So this one was a break even like I mentioned. I did take a scalp right here. This was on live stream. Because I had missed out on the initial position here. But this is the curious case that I was mentioning. A smart money trap is not mandatory, but market being open is mandatory. So in case we do the sweep of liquidity beforehand, okay, once market opens, it needs to sweep something. Just be aware of that. Because in here, you can see that we make this sweep previously, okay, previously to the open. The open is right here, where you can see the canvas being white. So as soon as market opens, what it wants to do? Wants to sweep something. Wants to search for liquidity. Once we got the liquidity, we go to the opposite direction. Right? And I didn't trade this, but if it was a bit calmer, right? If it gave me more time and not at the wildness at the open, you could have had this on the structure. And then 3R perfectly according to the other liquidity. Because the same thing. You draw liquidities in both directions. If we're already at the lows, well, draw London, draw something that's in New York that the open might sweep, and then to the upside you have this, which it's a bit before Asia, but I would consider it, because what's this high gonna do if you don't draw this one, okay? Because in case we do sweep it but respect the one above, then you're just playing with equal highs. So yeah, I got the scalp right here. This is on a strategy that I'm kind of developing just out of going for the direction, not necessarily the highs and lows of the market, because I position myself on the absolute lows, absolute highs, let's say, of the market, because that's what you can do once you trade liquidity. You can predict the very point where price is about to reverse from. But sometimes you have these days where it's just a trend to one single direction and I cannot position myself, and I know exactly where price is going, okay? But these are internal trades, which makes it a bit risky, but I know where price is exactly going because I know where the liquidity is. So then this strategy is something that I'm developing. It's still in testing phases. I'm only taking in the challenges, and to also fight the consistency rule, because this strategy has like 2R normally. Sometimes I go for 1, but most of the cases 1.5, 2R, and it has the 80% win rate, which is very good. I give a resource to my students about it, kind of like a 20-30 minutes video on the principles of the strategy and the strategy itself so far. I don't know if I'll bring it to YouTube one day. I'm all about giving y'all value, but I do need to keep some stuff for the mentorship students. They have been currently smashing it, and I forgot because this student actually took the same trade as me on NQ that I've showed you guys earlier, where you have the liquidity sweep, the entry right here, and he got himself a 2R just to fight the consistency rule on the futures challenges. He's actually funded. This guy has been killing it. He has made more than 5K working with me. This is another trade of the strategy, 2R, like I was mentioning, going to where? The previous daily low, which clearly looks like it's going to get taken. This was another decent trade. We're coming to an efficiency to the left. We sweeping London, okay? We have Asia below. We have a gap that's right here, right? As soon as it does a change of character below, and then what you have right here, the order block, that's the initial to the overall move to the upside, becomes a trap. And because this was a trap, guess what? You guys should already know, but this becomes a trap. I'm going to drop a full course on the smart money trap soon, so pay attention for that. And I think we took a loss right here, right? Because it isn't about just getting wins. We did sweep a previous daily low here, had some sort of structure here. We broke it, I positioned myself, and then guess what? London close trap timing. Okay? Because in Forex, this would have been super valid. The same way as it was for futures here. But it would most likely work because in Forex, we only do one sweep of liquidity in London close, and we don't need to make a trap when we are on London close. But when we're on New York or London, you do need to wait for a smart money trap. And in futures is the complete opposite. You don't necessarily need to wait for a smart money trap in New York, but once we're in London close, it's kind of 50-50. It's kind of 50-50. Sometimes it does, sometimes it doesn't, and sometimes it does a smart money trap on New York too. If you don't factor in the open, you're most likely gonna get trapped. Sometimes we do some sort of weak sweeps, right? It's not that significant, so we need to sweep it again. That would be kind of a smart money trap on the New York side. Okay, so this was a trap because not only was London closed, but also because price wanted to go lower, go to another liquidity, okay? So that was a mistake on the bias as well. You draw your liquidities, right? You have this test internal, you have Asia way higher, right? That's not even the structure. You need to count it right here. The bias here is overall bearish because we're going to major liquidities and efficiencies to the downside, which tells you the bias. Okay, so in the open, you most likely guess, and I did this too, that price would have swept this. And then perhaps we could have had some longs. Just by the fact of the bias, the overall most amount of liquidity being here, the proximity factor, right? Because we're super close to it, it might just sweep it. But no, we go to the upside. And as we go to the upside, I'm not mad about it. I just adapt to the market conditions. If it goes to the upside, it's even better. It gives me opportunity to short. So then we sweep this. It builds some sort of structure here. And then as soon as we sweep this candle right here, boom, I position myself, stop order. I don't position myself on limits, right? I used to do long time ago in Forex. But even on Forex, I stopped doing those because once you predict liquidity, price just flushes. Okay, sometimes. But it's just good because you have no drawdown and then boom, if you're right, you're right. Like that, okay? Same thing. This comes a trap. All right, and it isn't because this took liquidity right here that it becomes a protective high forever. Because if we go to the left, you already know the black line is drawn right here. We're making equal highs. Maybe, okay, we still didn't target. But do you think it's going to be working forever knowing its futures? So it tends to trend to the upside and we're making a sort of resistance here. All right, it's not going to work forever. So remember, once you go into the markets, you have your range. Market's about to open. Market needs to be open. We either sweep the highs and you short, or you sweep the lows and you buy. If we were in Forex, you have your same range. There's not necessarily a market open, but you can base yourself off the kill zones of each session, right? And then if we sweep the highs, you look to short. If we sweep the lows, you look to buy. But then in between these, you have to wait for a smart money trap. And this could be subjective. Maybe you don't know how to read them that well. That's why I'm dropping a course soon. But as you may already know, this is way more complex than this. But doesn't necessarily mean it's better. Perhaps you'd prefer it this way. Coupled with a nice price action and coupled with the easiness of prop firm challenges. But yeah, if your goal is trying to become funded, guys, the prop firm challenges in futures are just cheaper, which means you can scale even faster, get way more, and if you get way more challenges, then your chances of succeeding and passing an account are way higher, of course. Oh, and I forgot to mention that you can trade on TradingView itself, so it's super nice. Let me know what you guys think of it. Let me know if you prefer Forex or futures, and I'll see you guys in the next video. Thank you for watching.